Yeah, I did.
Oh, okay. So now
Mm,
today we are going to learn how to calculate pips on the chart.
okay.
Yeah, and the slides, I added some more slides.
Yeah, you added some more.
Yeah, I added something like either 4 to 5 slides. So I will be sending you an updated version.
Okay.
Yeah, I added this one here, the bearish engulfing definition, the bullish engulfing definition, the bearish engulfing, uh, the bullish harami, the bearish harami. You get it?
Mm,
So this is where I based my strategy, and the strategy I'm going to be teaching you.
okay.
I saw it is really important to put this to add it to the what to the slides, such that you are aware of it. Perhaps some other things that will come up, I will be adding them.
Yeah, you'll need to give me what you have,
Mm, the other
what you've added.
yeah, the other time I also added the types of traders, the one I talked about. I've added
Mm.
them. So the PDF is developing. Never know, I may publish like a book.
You're so passionate about trading.
Yeah, truly, truly. Something that gives you like freedom.
Eh,
I've not, okay. I can say I've moved a bit, and I know like the experience, the how the experience is.
yes.
And while I was growing, I used to say, I want to grow up, study, finish, and be near my family when I'm working. You get?
Mm.
So that is my dream. So
That is your plan even now.
you don't want to go away now. You're for you in your village. Your family is in Kampala. When I'm very missing it.
I know.
So you let me know when you're done.
I, I'm ready.
You're ready, eh?
I'm ready. Only that I have sold,
Mm.
but I'm failing to do what to move the. I'm failing to move this thing to move to where they call it what, where you put the cut loss and the profit what.
No. Just open your chart. There we are. You understand?
I'm in the chart
Yes.
and uh-huh,
Is the chart open?
it is open.
That's all I wanted. Have you made the checks? Have you checked the checks to see whether it's connected?
I've already made a profit of 119 from when I opened.
Hey,
I, I, do you remember the other negative 4,000 something?
500.
Negative. Now I'm in negative 308.
Wow, wow, wow.
Let me put it down up to zero.
Yeah, okay.
So
Mm.
I can be selling and buying. So it's important you tell me what to do.
No, no,
But
right now, let us do some more pips calculation. Then we shall go to the strategy I want you to master.
uh,
So now, right now,
mm,
you're seeing my screen.
hmm, yes, I can.
Now I'm going to draw 2 lines, one down here and another
Mm,
one up. Do you see those 2 lines, those two figures
mm,
on the price scale? You know the price scale?
okay,
You know the price scale?
I can see the scale with money.
Yes, yes. Price scale is the one which is vertical against time. So right now,
Mm.
you got your pen and paper.
Let, let, I have the pen and paper. Let me get water as well.
Eh, Also get me some water.
I have water now.
No, for me, I don't have water.
When you're in Kampala, there is no sunshine like here.
What are you talking about?
Kare, you are a bit okay.
A bit okay.
I also have pancakes and mandazi
Uh,
for after lunch.
uh,
When you're studying after lunch, you need to do what? You need to keep chewing so that you don't doze.
yeah.
Okay, so we continue.
So now, you see these two lines that I've drawn, one up here, and another down here.
I can see them.
So when we note down them on the black, I mean, when we subtract the lower from the upper,
Mm.
that is 3982.27. Can you see it fully?
Of course, I can't see it well because they are smaller. Eh?
The upper one is 39.
You want me to subtract?
I'm giving them to you. I'm giving them to you.
And you want me to get a calculator and subtract?
Yes, we are doing it together.
Okay, let me pick a calculator here. So you said 39?
82.27
Yes.
minus 3720.48.
Yes.
So which figure do you get?
261.79.
261.79.
Mm.
So this means that you see from the lower figure here up to the upper figure,
Mm.
this asset has moved 261.79 pips.
Okay.
That is called the change, the difference in percentage, which is the pips.
Okay.
You understand me?
Mm.
Have you written that down?
No.
Have you written the calculation down?
What is the formula?
The the formula, it is just simple. You get the higher figure minus the lower figure. You get the pip difference. Mm.
Higher figure
Mm.
minus lower figure will be equal to people difference.
Yeah, here it means this asset has appreciated by a value of 261.79 pips.
Mm.
You get,
Yes.
You get it?
Okay.
Now, when you understand this pip and you multiply it with your lot size, maybe 50,
Mm.
you're going to get the amount of money you're going to win on that trade.
People difference times lot size, eh?
Yes, is equals to the amount you're going to get or you're going to lose.
So what is the lot size now?
Take for instance, for this asset we have 50 as the maximum. You multiply by 50.
Here the asset is the 50, 10, 15, 0.2.
No, this asset has a minimum of 0.2 and 50 as the maximum volume. Remember?
That's what I'm saying.
Yes. So multiply by the highest, by the maximum lot size, which is 50, and you tell me the figure you get.
13, 13,
Yes,
089.5.
13
089.5.
point. That is now in US dollar. So meaning that if you bought at this low price of 3720 with a maximum lot size of 50, and you wait for the push up of around 261 pips, 0.79, this is the amount of money you'd get. That's the meaning. Are you getting me?
I get it.
Now, when you multiply this 261.79 with 0.2, the minimum lot size, still it will give you the money you'd have gotten if you used that lot size. You multiply and we see.
261
Yes, 0.79.
times 0.2.
Yes,
You get 52.358.
52.358. Have you seen? Hmm? Meaning the same explanation stands. If you'd have used 0.2 and the asset appreciates by 261.79, you'd have gotten like 52.36. You get?
Yeah.
Now the same applies to stop loss. Hmm?
Okay.
When now take for instance, you see this solar value.
Mm.
When we get another lower value, maybe let us take this to be our stop loss down here. Then we calculate the difference of 3720.48. Can you type this on the calculator?
37.
3720.48.
Mm. Okay.
Point, yeah, 0.48 minus
Mm.
3692.40.
Mm. Okay.
Which value did you get?
28.08.
Now these are the number of pips that we would have gotten, that we would have assigned to our what? To our stop loss. So now you multiply this 28 by 0.2. Tell me the answer you get.
I multiply by 0.2.
Yes,
You get 5.616. 616.
5.616. So this is the amount of money we would be willing to risk to gain 52.35. You see, we are risking
Okay.
a smaller percentage to gain a bigger percentage. You understand?
Yes,
So everything you've seen, it is calculated in terms of pips. Mm?
I get it.
You understand me?
Mm.
So now, if we go to the chart of 5 minutes time frame,
Okay.
then I'll say, let me sell, let me identify a position of maybe an opportunity. I will say I've identified this. Are you seeing my chart?
Okay.
I've
Mm.
identified this as my resistance, and I'm
So
saying
that resistance of yours, for it, it's just for identification. It has nothing it can do in the real trading.
no, it has a very big impact. Yeah, it
Can
has.
it stop the trading from going into losses?
No. It's the next thing I'm going to teach you. Let me first finish this. You hold
Okay.
your question for the next session. You see, I've identified my engulfing pattern. This is a bearish engulfing pattern, and I mark this as my support. My resistance. So
Okay.
prices are going down. They are not retouching my stop my resistance up here. So it means
Mm.
I'm going to make a small sell. So now I'm going to sell. You've heard the sound? Yes. You see, on the initial position,
Okay.
I have sold at so what price level have I sold at? Can you see?
You have sold at what?
Can you see the price level I have sold at?
3945.
3946.37. So now I'm going to push up. How many pips? I have pushed up around the. Are you seeing the points?
Yes.
I've pushed around 3,084 points. Hmm?
Okay.
This is equivalent to 30.84 pips. Okay. Now you multiply 30.84 times 50. Which answer do you get?
30.84 times
50.
1542.
Are you seeing the value which is there? Are you seeing this value? Profit? Are you seeing the profit?
Yes.
And which answer have you gotten? Tell me.
42.
1542. So have you seen that pips calculation is very important?
So here you're calculating the amount of money that you're likely to win,
In terms of pips,
in terms of pips.
you get.
How do you get it?
I told you, you get
Mm.
the upper figure or subtract it from the lower figure, or the lower figure minus the upper, and you get the difference.
Then the difference multiplied by 50.
By the lot size you have entered in with, the lot size
Swear.
the lot size you've used.
I get it.
Now the same applies to take profit. Now, like when we drag down, you multiply for me 44.59 times 50. Tell me the answer.
44.
0.59 times 50.
You get 222.
Wait.
9.
222.
9.
9.
0.5.
Are you seeing? Have you seen where where the thing is? Are you seeing where I've put
Mm.
my cursor that it gives you the exact answer? You're now understanding me?
Where did you get the 44.59?
See, I okay. For this case, the software calculates for me automatically.
At where is it?
Ah, you're seeing the points,
Which point?
on this on the screen where I've put my cursor. There is a drag to modify. You're seeing
Mm.
now. Are you seeing down the points?
4459.
Mm.
Mm.
Or if that is very hard, are you seeing the toolbox?
Okay.
Are you seeing my entry price? What is my entry price in the toolbox?
3945.
Yes, 3945. Now, what is my take profit?
3900.
3900
Mm.
point 78. Now
Yes.
you get for me the difference between 3945
3945.
0.37
Mm-hmm.
minus 3900
Okay.
0.78.
0.78.
Which value do you get? Read it for me.
44.59.
Have you seen? Multiply by 50.
2229.5.
Isn't it our profit which is exactly here?
Yes.
I hope you're understanding something today.
Yes, I am.
Mm.
But that one we shall repeat later.
Eh, okay, okay, okay. So, but get this formula. Hmm? It is
Mm,
profit or loss
mm,
is equals to. Are you writing?
mm-hmm,
Is equals to lot size times
mm.
the pips difference. The pips.
The pips difference
No, the pips times the pips because it's already a percentage in pip points. It's already
times the pips.
yeah times the pips. Eh?
Mm,
Pips is either way, either upper minus lower or lower minus upper. Okay.
okay.
Yeah. So are we together? We go to the next topic of today.
Yeah, we can.
Uh-huh. Now this is the strategy that I want you to learn. It is here. It is here. Like no, it's not here. It is here. The trading plan. Have you seen this in
Mm,
the PDF?
I've not yet read again.
You should review that thing. With this
You
explanation.
people with the you people with the reading, I'm going to read everything.
Eh? Don't say like you we people of reading. No, it is to your own good. You rehearsal. You're rehearsing for exams. Hmm?
You know, you 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 need to be like this Valinwa chick.
It
For
is
her, she said that if you don't, she was like you must read.
yes.
She's like, but if you don't want to read so much,
Uh-huh.
contact the experts. We are here. We trade for you. Cut now. You should also be telling me the same. Be flexible.
It is okay. It is okay. No problem. Hmm?
Eh,
But this is the trading plan.
okay.
Before you attack something, you should have a plan. So this is my plan. I
Mm.
identify the overall market on the 4 hour and 1 hour. That is the higher highs and higher lows. Then I mark support and resistance zones using two candlestick patterns, the ones I've told you before.
So identify the overall market structure on 4 hour, 1 hour. Huh? So what does that mean?
It means you go on 4 hour time frame and you
Mm.
identify which market structure is it. Is it uptrend? Is it downtrend? Hmm?
Okay, that's 4 hour. Where is 1 hour?
1 hour is here. Hmm? 1 hour.
Okay.
See, 4 hour it means the market is going up because the bull candles are very many and also prices are being pushed up. You get?
Mm.
Now you come back to 1 hour, still
Mm.
the same issue. You're confirming, reconfirming what is happening on a
First, go to 4 hour.
4 hour.
If you are at 4 hour right now,
Yes.
and you're going to, can you enter at this point, or you first wait? They start moving
No,
down.
no, 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 no. 4 hours are not for execution. Even long-term traders don't trade on the 4 hour. Hmm?
How is the 4 hour?
The 4 hour, like it just tells you the overall picture of the market.
Anyway, what I'm trying to mean, let's say that was 1 hour.
Uh-huh.
What would you do right now? Would you sell? Would you buy? Or you wouldn't do anything? You wouldn't enter.
Well, right now I wouldn't enter.
Eh,
Yeah, I wouldn't enter because the market can come down and again push up.
oh, let me let me let me first talk to this colleague of mine. We discuss work. 1 minute.
Okay. Eh. Somesa abantu abatagala kusoma nakyo si kyangu. Sorry. Kyato ogitegeera? Kyati njagala okwasa zino gundi pozi kano ka pdf sikakuwanga kaneeno simplified 44 slides 44 slides only naye gate nkiwa ebintu ebimanyi obisomyeko ebyo bikwasa mangu olaba very simplified kandabe
gaita yagala soma
kano osobola n'okukasomera oba in a few days even one day you can
tewasooka wateekamu bino ebyekoni twagala
of course you should know the overall picture if you're going to trade currencies, but this one is very easy. This one you're just going to watch candles, but now when you read this book you can trade this, but for currencies you cannot trade because you'll need some more factors. There are more things that are touched. Wakeeko kati gwe nawagenda n'osomaako kiri okay. Tambulira ejeeko ayinza kubanga kwendi ali mu kumpulira mbu tayagala soma keeko nakujja ku network simanyi oba waguze datawo kati ako kaliwa gulawo tulabe kubanga nkuwadde akakadde somera waye somera mweri wange nkiwa tomanyina tumanyi just once kati gwabeera ku office gwo printinga just kano jakeeko keeko mwina kaladi
ebyeyitawo kyabyagala
bangamba printer yafa nene
baddamu ne bagikola
kati nga bazzeemu ne bagikola kankweyo kano waliwo ke nafunye juzi
bagikoze
kumyewo kwa joyininze halo
inakuja kwa earphone.
wanti halo mami Brenda halo mami Brenda
Hello. Hello.
halo sirizeeka kweno call maybe nja kusindikira separate link wejje
It's fine.
ya kale wejjeeko eh okay ako neosoma ako kiryoke kati kankwekana akatabo kena print kenafunyeyo kenjagala osomako about it's called I think it's called blockchain something it's black and white colored
kaladi mwe
enkyogenda kati print that one colored what double sided
bosai
both sides I don't know if you can make like over four slides 1 2 1 2 3 4 slides on one paper a printing a double sided njagalayo kano anti project egwa weekend next week
abajjajja ate nga bakola tebalina ssente
soko tulabe kano kagundi kano ka post
eddamu Manchester City
I was saying like the strategy I want to teach you is we go on a higher time frame and we identify our support and resistance.
Okay.
I think it was, I was reading the strategy. I think reading the strategy, yeah.
trading plan
I was here, mark your support and resistance zones. Then wait for price to pull back in the previous candle, then execute accordingly, sell for downtrend and buy for uptrend. Then your stop loss, remember this. Let me even bold it. Let me also bold it. Your stop loss should be put on the lower candle of the on the open low of the previous candle. I'm going to show you. Take profit will depend on your risk appetite. Okay.
Okay.
So this is what I mean. So now when we go on 4 hour, I told you we have this is uptrend, right? Now mark your zones. Now this is the zone I mark as my support. This is my support. Why? Because this candle is engulfing this candle. And also another zone is here. This candle is engulfing this candle. This candle is engulfing this candle. Are you seeing?
Okay.
And all of them are bullish engulfing, right?
Okay.
So now I go down to 1 hour. Still, I'm seeing the same structure. I've seen this one here.
Mm.
I have seen this one here. I
Okay.
have also seen this one. You see? You see it?
So you're looking at the patterns in different our categories. Eh?
Yes, yes, yes. You see this one, it means this is
Mm.
bullish engulfing. So when I
Mm.
see a bullish engulfing, I mark them as my support zones. Mm.
Okay.
Now here, since there are very many price congestion, it can also be a what? Your support, because this price level is preventing price from going down, so it means it's continuing going up. It's an uptrend. You're seeing how I'm
Mm.
marking these zones, eh? Hmm? Now, hmm? now I do what? After marking this zone and knowing that the market is in an uptrend, I will have now only a bias of buying, eh? Hmm? But
Mm.
buying, I will go down to 30 minutes time frame to see what is further happening in the market. Eh? Hmm?
Mm.
You see, another engulfing pattern is here. Are you seeing? This is my support. You're seeing?
Mm.
When I go on 5, still it gives me more about what is happening. It reveals much more. Eh? So now I will come back to 5 minutes, and still I identify much more patterns. Another one is here. Hmm? You're seeing bullish engulfing. Eh?
Mm.
So now, since I've identified this pattern, I'm going to wait for this next candle to tell me what to do. Eh? You're seeing
Okay.
this next candle here. Eh?
Mm.
I will wait for this next candle to first pull back like it has pulled back here. You seeing this week?
Mm.
It will pull back. After pulling back, I'm going to buy here where this line is, and I put my stop loss below.
Mm.
And I put my stop loss below the previous open low of this previous candle. This is the previous candle to this one. Eh? This is a previous
Okay.
candle to this one. Then I put here my stop loss. You see, prices are playing just only up because it seems to be respecting this support that I've identified. Hmm?
Okay.
Are you getting it?
Yes.
Now your question comes in. What is your question? That the market prevents something? What is your question?
That triangle you've drawn there,
Yeah, huh?
what is it of any significance when it comes to the real movement of the traders?
No, 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 no. This rectangle is just making my eyes to see that price is respecting that support. Mm. It is my visualization. Eh?
Mm.
It is my visualization on the chart.
Okay.
Mm.
Mm.
It is just a tool, like in AutoCAD, just drawing lines. So this is like my object, eh? To make me see that
Yes.
this is where price is coming from, and it is respecting this support. Only that.
Okay.
It has no significance. Mm.
Mm.
So now, when you buy and you put here your stop loss below. Are you seeing some? I'm not putting exactly, but just below. Eh?
Why do you put below? But what if when it's coming low doesn't reach below, and you going to make
Of
losses?
course, you're going to make losses, but you're protecting your what? Your account. When you put stop loss, you're protecting your account. Hmm?
So I mean, why don't you put the stop loss exactly at the candle?
Here, like this.
Go go up a bit until you touch blue.
There, like that.
No, until you touch blue.
Like this.
No, take up the stop loss there. Why not there?
Here. Hmm,
Mm.
according to my strategy, everyone has his own strategy. Here, I anticipate price.
Mm.
The market will come here and take out my
Mm.
stop loss. Eh? Hmm? But now here,
Oh.
but now there,
Mm.
it will come and occupy this region here. It will occupy this region, and it only remains with a very small pips to take out your stop loss. Then it goes up. You're going to see these scenarios in the future. You're going to see them that I was taken out by only smaller pips. How I wish I pushed my stop loss below.
So now, when the stop loss is exactly there,
Mm.
the prices can push it and push it around. You go into losses.
Okay, when it is where it is right now,
Eh,
here, I'm giving myself an allowance that just in case the market comes and touches this week, comes and touches
mm,
this week, and it
mm,
bounces up,
eh,
there my stop loss, my stop loss won't be touched. I have made a study that most of
mm,
the times price comes back and takes out liquidity. There's something called grabbing liquidity, words that I
mm,
think you'll read in the future. It
mm,
come and grab this liquidity and it continues to the upside. But now if you
yeah.
push it slightly lower like this, there are
Mm,
very high maybe like 70% that the market won't take out this price according to this structure here.
okay.
You understanding me?
So, a question. Um, when you're putting a stop loss,
Mm.
let's say now I can see now you're selling and the candles are coming down.
No, buying here. I told you I have been doing a top-down analysis. Top-down analysis. Do you read something about top-down analysis up to 5 minutes?
Eh, when candles are going up, that is selling.
No, that is
So,
buying. Prices are going up.
ombuzabuza,
Prices are.
ombuzabuza,
It is you who is not reading the literature.
ombuzabuza. When the candles are going up, that is what?
Buying.
When they are coming down, that is selling.
Yes.
So now, if those candles coming down,
Mm.
if they come down and they don't reach your stop loss,
Mm-hmm.
and they again go up, what does that mean? I thought when they come down, they need to reach your stop loss and then you get out.
You're asking two questions at once, but the first one is
Mm,
when they come up, yet we are in a buying mode,
mm,
they are coming to grab what they call liquidity, to pick more orders, eh? Now
mm,
when you start going deep, this one is called a demand zone.
mm,
Demand zone. There are very many orders that are waiting here to be picked.
mm,
Then the market continues going to the upside. You get?
mhm,
So for me, according to my strategy, I said that if the market is pulling back to this region to collect more orders, it won't affect my stop loss, which is below here, but it will continue
mm.
going down. My
But
strategy,
we'll continue.
it will continue going up. I mean, it will continue going up by coming back here. It's called the term called pulling. I mean, pull back. Then it continues
Mm,
to the upside. But now, let me show you on the chart what I'm talking about. I've seen it. I've just seen it. You see, I've identified this. You see, I've identified this.
mm,
And now for me, I'm going to buy around this area. Wait for this candle to pull back, then I buy.
mm,
Then I'll put my stop loss where? Below. Below this candle, like this.
mm.
Uh-huh.
Okay.
Uh-huh. Now, are you seeing this region? This region is called the demand zone, as I was explaining around here.
Mm,
You see now what happened? That price came back here and picked more orders, and it continued up, then it came down again to pick more orders, then boom. Have you seen this momentum candle to the upside?
Mm.
That's what I'm meaning. And my stop loss,
So now,
wait, let me finish. And my stop loss down here is not touched, it is not attacked.
mm,
You understand?
yes.
So now, where is your question now?
So you said that this very big candle here,
The blue one, yes.
mind you, yeah, mind you, you're in selling.
I'm
Okay,
buying.
okay, you're in buying.
Yes.
So now this candle after being printed,
Mm.
then you print these two candles which are coming downwards.
This one's called pullback.
So me, I thought the moment this topmost of the candle is reached,
Mm.
you pull out because the moment they start printing going downwards, again you're in losses.
Of course, it is now according to your appetite, your risk appetite. The one I told
Yes.
you, risk appetite.
So you keep making a few losses, then you make another profit. You make losses. So at the end of the day,
Yeah.
uh, at the end of the day, what do you take? Because according to what I can see, what you're telling me
Mm-hmm.
is that you put a stop loss like way below the candles,
Yes.
and the trade will continue in an uptrend, downtrend, uptrend, downtrend until you leave.
Yes.
So during the uptrend and downtrend, eh,
Yes.
since you're in buying, during the uptrend you'll be making money. During the downtrend you'll be making losses,
Mm-hmm.
but it continues moving.
Mm.
Eh? So why don't you put your stop loss at a point such that the moment it is going to start going downwards, you get out? Because the moment you stay in, does it mean that the longer you stay in, the more the profits
It
as
depends.
it goes up and down?
It depends on your risk appetite where you put your stop loss. Remember, risk to reward
Mm,
ratio. Eh? You may say,
mm,
I'm risking 10 to get 20. That's 1 to 2. I'm risking
mm,
20 to get maybe 80. That is 1 to 4. Okay?
mm.
So it will depend on your risk appetite, which is in your trading plan that I've said. Your risk appetite. You understand?
Okay.
When you put a stop
Mm,
loss that is going to be $10 down, what is your risk appetite telling you? Maybe I want a profit of 90. That's 1 to 9. So you'll have to wait until uh, your take profit of $90 is reached. That's when you'll get out, or you'll be prompted to come out if the trade reverses.
mm.
When you see another setup, maybe engulfing candlestick comes, or a bearish engulfing comes up. You understand?
Okay.
Yeah. I've made some point.
So according to you,
Mm-hmm.
now like what I can see on your screen,
Mm.
you see those two blue candles, the big ones that are following each other
Yes.
on top of the
These ones here.
and no, go the big ones go on the left.
These ones.
Those two.
Yes.
So for you, you're comfortable to start from where you're placing the cursor now
Mm.
in buying,
Uh-huh.
and you stay in on and you stay trading up to where we are right now.
Now, there is something else called the trailing stop loss,
Mm,
locking some of your profits as
mm-hmm.
the market continues pushing in your direction.
Okay.
You get?
Mm,
Now, if I buy here,
mm,
wait, if I buy here, here,
mm,
and I put
mm.
my stop loss below this candle,
Okay.
and I know how much money I'm willing to lose in this gap in terms of pips.
Mm, okay.
I will go away. If I go away,
mm,
emotions won't take me out. But now, if I stay on the chart and wait, I may come. I may. I mean, if I keep on looking on the candles, I will say, "Hey, market is coming to take me out. Let me go out." Now, those are emotions. Hmm?
mm,
But now, if I go away and I do other things and I close, I protect my account by putting this stop loss and put my take profit. Emotions won't affect me at all. I've already entered the market and I know either when I make a loss, I'm going to make this loss. When I make a profit, I'm going to make this profit. You understand? You've already
mm,
determined the parameters that you are going to do what? You're working in. Eh? You see, when you put money here, you're willing to lose it. Hmm? You don't say that I
mm,
want to only make Magova only. No, that's not the name
mm,
of the game. The name of the game is it is a 50-50. You either win or lose. Hmm? But
mm.
don't say I'm coming here to only win.
So
There.
you said that there is how you can lock your profit. That's what I was listening. I'm listening. I want to know how.
But now you see you've entered here and the prices
Mm,
have come down almost to your
mm,
stop loss. But now
mm,
again they go up, then come down, they go up. So now when
mm,
they go up, when you see that they are up,
mm,
and the market price is around here, you can
mm,
extend your stop loss and put it here. Hmm? While the market price
mm,
is playing around here. Hmm? So
mm,
now, when the price come back down here, it's going to hit your stop loss, which is here. But the Magova, which has been locked in between these two positions, these two gaps,
mm.
you're going to go with those. You understand?
You go with them, but you have left the trade that trade.
No, the trade will kick you. I mean, it will kick you by what they call trailing stop loss. You've moved your stop loss from way below here up to way below
Mm,
up here, locking the profits, locking profits from here to here. Eh? And you can calculate how much profit you've locked by subtracting uh, your entry position from that where
mm,
you've put your stop loss, and you'll know your
mm.
Magova times the lot size you've used. You'll know the Magova you've locked.
Okay,
You understand?
I get it.
So is there any question?
I think it's where.
Mm. So I think let me task you. Let me give you an assignment.
Mm,
You're going to be identifying for me these candlestick patterns, bearish engulfing on the chart. Then you take screenshots and you send me.
bearish engulfing.
Yeah, bearish engulfing and bullish engulfing.
So you're taking me back to notes right now. Why don't you?
No, I want you to see them.
Auntie,
Don't say that I'm taking you to the notes.
what you're telling me is simple.
Uh-huh.
Go and read. Can you think I remember how bearish engulfing does?
But now, if you don't remember, then you're not going to trade.
No. I'm going to trade because I'm going to keep reading until a point that I have them off head just like you have them.
That's when you're going to perfectly trade. If you have them off head like me, that's how you're going to perfectly
Mm.
trade. Mm.
And secondly, as I start trading, I'm not going to trade alone. Mm.
It is
We are going to
okay.
trade
It
together.
is okay. Eh? It is okay. But I want to trade together when you're also
Eh,
aware of what we are doing, what we are trading. Mm.
no, you send me the updated
Mm.
slides.
Yes.
I'll go through them.
Mm-hmm.
I remind myself of the of bearish engulfing, bullish, what.
Mm. You see,
Uh,
I'm giving you only four candlestick patterns, but now if I take you to other candlestick patterns like the morning star, the shooting star, the evening star, the
you need to
30-minute,
send you,
eh,
you need to resend me back that PDF. I don't know where it went. Eh?
I'm going to resend you. I'm going to resend you.
The PDF that you had given me at first.
No, like this updated abbreviated one is containing some more things that I'm adding all along. Okay, I'm compiling some more questions that you're asking in the PDF.
Mm.
Mm.
Okay, cool.
Yeah. Mm. So you have only 4 patterns to master in your head. Only 4.
Which I'm going to master definitely.
Only
I'm
4.
already mm.
I've not told you about the chart patterns, the M, the heads and shoulder. Uh, we have the rectangle. I mean the triangles, the flags, the pennets, the rectangles. You've not
Mm.
just there is head and shoulder. You've not seen them top, bottom, triple bottom, top, bottoms. Mm. I'm giving you only
Mm.
4 from the many that I'm telling you. Mm.
Okay.
Yeah, so I think for today, let's end here.
So before we end,
Uh,
you stop sharing. I share my screen. You look at this such that there is something that was failing me, which I want you to look at.
uh,
Share my screen. So
mm,
I'm going to buy.
wait, let me
I'm
see.
I'm
Okay.
going to buy at 10,
You're going to buy it, the market is going down.
but it's going up.
Okay, you buy. Okay, you buy.
I'm going to buy.
Uh-huh.
So after buying,
You go
I
to the
want to move.
you go to the trade tab.
I go to the trade tab.
Yeah. Uh-huh.
Um, hey, I'm making losses. So I'm going to put my stop loss. You see the stop loss is not moving.
No, 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 no. You'd
Eh,
have. Where did you enter from?
I, is it here?
Yes, that's where you entered from.
That this one,
Yes. Uh-huh. Continue. Did you hear some noise? Boom.
it has refused. Why?
Yes, it refuses. It refuses. Continue down. It has refused again. Move lower.
Yeah, guys.
Move lower, 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 lower.
So I really go down,
Yes. Go,
like there.
go, go. Yes, there. Still, it has refused.
Yes.
You go to 5 minutes time frame.
Where am I?
You're in 1 minute. Uh huh. Uh huh. Continue.
Isn't that very far?
That is very far.
Why is it? Why does it refuse?
Now, there is one thing I've discovered with this asset.
Mm,
Like it doesn't want this stop loss and take profit to be very close to the current market.
eh,
You understand?
it just wants to eat your money.
No, it wants you to put at least go far away. Mm.
Then putting, let me take up and see.
Let's very close. Now wait. You go to the price scale, price scale, price scale, left, right hand side, right hand side, right hand side,
Where
right.
is the right?
Yes.
Uh-huh.
Now squeeze down, left hold and squeeze, move down. No, price scale, price scale. Again, really. Now you drag take up. You see it has accepted.
But to me, that is both ways, isn't it far?
Far? What do you mean far?
Cut. I I've taken that profit also. Let me buy again.
Uh-huh.
Do you know why I'm doing that?
No.
I'm doing that because you see in my history,
Mm.
I want to reduce it to. I want to become profitable. Now I'm at negative 200.
Mm.
So I want to become profitable. That's why I'm taking away every profit I get.
Okay. Now
Eh,
you see this. You see below here,
mm,
above the toolbox, there is volatility. There are very many assets that are open.
above the toolbox.
Yeah, above the toolbox.
Where where is the toolbox imposing?
Yeah, where you're moving the cursor, there. Right click there and close that.
I close which one?
That one. Where close?
I close the 100 one.
Yeah, you close. Right click and close.
This very one, eh?
Yes. Don't you don't you see there are very many that are open?
I can see 100 index H1, M5,
You close.
M5. So
You close and you only remain with one.
they are the same, eh?
Yeah, they are the same. Yes.
But they are H, M, H.
No, just close.
So I remain with that one.
Yeah. Then you go to 5 minutes time frame because now you can't see. Uh, you go. You see where the zoom in and zoom out is.
Where?
Zoom in and zoom out. Up on the ribbon. Wait. No, wait. You go to the. No.
I go to what?
You go to zoom in and zoom out and you just put there the cursor. Now move to the right, one step, second step, third step. You click there.
Okay.
Yeah. Then you press Control K. Press Control K.
It increases the size, eh?
No. You press Control K again.
Uh-huh. Nothing has happened.
But it removed some of bars which were down here. They were green in color. You saw them.
They were where?
They were down here above the time scale. Above the time scale. You didn't see them, but I saw them.
So you can remove even some bars.
No, there are some things you can toggle off and on.
Eh.
So now, where were we, Posy?
We had finished. We are just. I was asking a few questions on this trade.
Eh, do you have another?
No, it is well. Let me make sure that
Wait,
uh,
wait, wait, wait. You open the market. Control M.
I need to write those what?
Control M. You write it. I think.
Control M. You open the market.
Mm. Control M. That's why I'm telling you. You write down. You don't want to make notes now. Are you seeing below 100 index? There is click to add. You put there the cursor and you type there volatility 175 index. Continue typing. No, not that one. You just added volatility 75 index. You've selected the one S. 75 space enter.
That is okay.
Yeah, enter. Now you right click on that asset and you click on chart.
I click on this asset.
Right click.
Then
Then you select chart window. Now you close the market.
I close the market.
Then now you press Ctrl K. Have you seen what has happened?
It has increased in height.
There is something that disappeared.
I always don't see those things. I don't know why.
Okay, you go to 5 minutes time frame.
So what is the difference between 75 and 100 index?
Well, 75, it means that the 75 emulates the foreign market. 75%, it copies, it mimics the forex market. 75%. The same applies to the figure 100.
Okay.
If this one runs at a speed of 100 kilometers per hour, then 75 just emulates only 75% of 100. That's the speed at which this one runs.
So for you, you're trading 75 or 100?
I swing between the two. But right now, on that one, what would you do here?
What would I do?
Yeah, first zoom in.
But I'm already buying.
You first zoom in there. This is a different asset, remember.
Hey, this is different. Hey, cut me. I'm in this volatility 100. I'm not there in 75.
Yes.
Hey.
So all of them have different properties. When you go to specifications,
Okay.
which you have to master. Don't master them, just put them in your head. So now what would you do here right now on the 100, on 75?
I wouldn't enter.
Why?
Because I'm not sure whether it's going down or going up.
Okay. Yeah, you're very right. You're very right. But you can do a top-down analysis and you see, you go for 1 hour, you see which patterns are you seeing much more. Now for the case of this one, I can see it is a downtrend because you see at top right there is negative 2.1719. That tells me that it has moved below by that percentage, meaning it's a downtrend. But
Is it a downtrend? I can see it's an uptrend.
no, it's
According to the pattern I'm seeing.
Where?
The candles,
Well, it has broken. It has broken some point. It is an uptrend.
It's an uptrend.
It's an uptrend, but it's just retracing.
Exactly.
It's retracing, but it's going to continue with its swing up.
Exactly.
If you first go to 4 minutes, 4 hour. 4 hour. Yeah, 4 hour. Yeah, it is going up. On a 4 hour, it's going up.
So which is when I want to buy or sell, I always be in how many minutes where I can view properly and understand. 15?
5.
5,
5 is where you execute from.
Yeah.
You can also execute from 1 minute, but for it it's too volatile. It keeps on changing very fast.
I really need to get out of this market. Kubanga, I can see
No, wait. Open it. Open 100 and we see. Open the other side 100 and we see where you are.
I open 100.
Yeah, you can open 100.
Yeah, I'm in 75. Am I
Mm.
okay? I didn't know. I thought I was in the one which I'm using.
You see, when you have very many assets, that's how the confusion comes in. So you close the 75. You just right click and close it, and you concentrate on one.
I'm also even going to close this one. The moment I get profit of 100, I'm going to close it.
But you can wait and take profit.
And I want to wait.
You see,
Mm,
there's something I'd wanted to tell you about this 75. That's why I told you to open it.
now you've not told me.
Of course, there's a lot that came in. So with 75, for it,
Mm,
when you buy and you drag a small your stop loss below, it will accept.
mm,
It will accept. But for
yeah.
but for 100, when you drag slightly below, it won't accept. That's the only difference.
But for 70, I tell you, when it comes to the profits you gain, what is the difference?
The difference, there's no big difference. The profits, this asset moves exactly fast like the 100 moves. Mm.
Mm,
But its specifications are different. Its minimum lot size is 0.001 and its maximum is 1. You get?
eh, eh,
There is a range of 1 and 0.001. This
mm,
where you trade from. Mm.
the range is small. Eh?
So I think for today, I'm also exhausted today. I'm really exhausted. I've talked too much and I'm feeling some headache.
No, it's well.
Mm.
Thanks a lot for this.